Thank you for joining us today. We hope that after watching this presentation, you've seen how we delivered strong results and how we intend to further operationalize our Powering Progress strategy. Today, Sinead and I will be answering your questions. And now, please, could we have just one or two questions each so that everyone gets the opportunity? And with that, could we have the first one, please, operator?
The first question is from Ron Busso at Reuters. Please go ahead.
I want to ask you two questions, and I know it's early days, but I think investors are very interested in knowing your thoughts. First of all, about your outlook for return. You mentioned that the macro will still be volatile, but what do you think Shell can and should do in terms of dividends and buybacks going forward? And second question, oil and gas kind of rose in importance once again last year. And clearly, that's where the money is at the moment. Where do you think Shell's oil and gas production is going? Are you thinking of changing kind of the trajectory set by your previous CEO? Thanks.
Ron, good morning. Thank you for the two questions. I'll take both. Let me start with the second one. More to share on that, Ron, in our Capital Markets Day in June, but maybe just give a bit of a perspective. So over the last few years, what we have been doing is focusing on high-grading our oil and gas production. Our mantra has been value over volume. If you compare, for example, the 2022 results to where we were in 2014, our production's down by around 7% in that period. But if you look at 2022, our earnings are up close to 70% compared to 2014, and the free cash flow is north of 80% up. And so that real focus on the margin that we can create from our barrels and high grading to the core countries that matter in terms of how much value they create for us has been a key part of our strategy. Similarly, in the gas business, you've seen how we've continued to grow. Examples like our signing of the Qatar deals last year, the North Field expansion and North Field South, amongst other deals that allowed us to continue to develop volumes. And maybe the last point I'll make on that specific question is we continue to grow third-party supplies into our portfolio of LNG as well. This is not just about our own equity production, but to be able to have the scale to trade and optimize and create value from that. In terms of the overall outlook for distributions, what I would firstly remind everyone is in 2022, we showed that we can have a balanced capital allocation, and that's what we continue to do in 2023. We've already announced a 15% dividend uptick, as well as $4 billion of buybacks in the first quarter. We've also announced $23 to $27 billion of cash capex, and we continue to make sure that we focus on a resilient balance sheet. So in terms of distributions, I hope the first quarter distributions that we just announced give an indication of the confidence we have in the underlying strength of the business and our ability to continue to reward our shareholders over the coming months and years. Thank you for the question, Ron. Operator, can we have the next question, please?
The next question is from Emily Gosden at The Times. Please go ahead.
Morning. Thank you very much. Firstly, how much of your $40 billion profit was made in the UK, and how much tax did you incur and pay in the UK last year? You mentioned a figure of $900 million, Sinead, but I think that's perhaps an accounting write-down. Perhaps you could clarify. Secondly, Shell said in November, after the energy profits levy was increased, that it was reviewing its £25 billion UK investment plans. What was the outcome of your review? And is your strategic review into Shell Energy Retail part of that? Thank you.
Thank you very much, Emily. Can I ask Sinead if you can take the first one? I'll take the second one.
Certainly. Thank you for the question, Emily. So just to split it down and to take a step back for a moment. So in 2022, we have paid cash tax of $13 billion across the globe. You asked specifically around the UK. So yes, we did pay tax in the UK. We paid over 100 million of cash tax out in the UK. However, what we're expecting to see is more than 500 million of cash tax out in 2023. Now, of course, that's logical when you see that from the start of this year, there is an effective tax rate of 75% in the UK. You specifically asked as well, Emily, about where are we in terms of how much we make in the UK. Less than 5% of our revenues, global revenues, come from the UK. So that gives you a little bit of a perspective as to why the 13 billion of tax is a global number.
Thank you for that, Sinead. Emily, on your second question around the review of the $25 billion and the link that you make there to Searle. Just to step back for a second, we continue to believe in the significant potential for energy investments here in the UK. And we hope that people continue to see the contribution we make. Just take 2022, where 20% of the gas that came to the UK was processed through Shell facilities in the north. And roughly 18% of the overall LNG imports into the UK last year came from Shell cargoes as well. So we continue to make a significant contribution, not to mention the investments we're making in Jackdaw, in Piers depressurization and the like. When we talk about the 20 to $25 billion potential investment in the UK, it is the sum total of all the opportunities we currently see. Every single one of them is going to have to be assessed on its own economic merits. We do not sort of take a singular view of the totality of it. The review was triggered, of course, by concerns around just the underlying stability in the investment climate. We have seen windfall taxes, we have seen price caps, and all that, of course, for an industry that invests to be able to see profits in 10, 15, 20 years is destabilizing, and therefore we have been trying to focus on where we can actually invest with confidence. So we continue to look at that. It's not a singular review. We continue to assess those opportunities one at a time. The Searle, which is Shell Energy Retail here in the UK, is partly linked to that, but very specific in that we, as you know well, we've continued to experience very tough market conditions, including some of the points I mentioned around price caps and the like. And after having tried to build that business over the last few years, we have felt that now is an appropriate time to be able to take stock of where we are, where the market is, and then to decide how we go forward. That's a review of a few months, and then we will come back with a bit of clarity as to where we're going to go with it. Thank you for the question, Emily. Can I have the next question, please, operator?
The next question is from Matt Oliver at The Telegraph. Please go ahead.
Good morning, and thanks very much. I just wondered, you obviously have made enormous profits from oil and gas this year. It's been, or in 2022, it's been a good year to be a big oil and gas producer. But we heard this week that some of your rivals have been re-examining the returns they get from renewables investment versus more traditional oil and gas. Can you just talk to us a bit about how do the returns differ from these newer renewable energy investments in comparison to oil and gas in your view, and to what extent is that affecting how quickly you think you can invest in green energy? And then just secondly, we've heard from some politicians this morning, Labour have been on the radio, and they're saying that the amount of money that's being returned to shareholders by big oil companies in the past year, is dwarfing the amount that they are investing in renewable energy, and sort of implying that that as an industry you are still not taking seriously the need to invest in renewable energy. What would you say in response to that?
Thank you for those two questions. They're very interlinked, so maybe just try to address them as they come. If I step back for a moment, I fundamentally believe in the fact that the world needs a balanced energy transition. In essence, we need to be able to deliver secure and affordable energy that is increasingly lower carbon to be able to transition in a way to achieve the net zero emissions energy system that we all aspire to. Having said that, I think if 2022 has shown us anything, it is the reality of underinvesting in a system and what are the implications of that, as we've seen volatile energy prices last year, mainly in the gas arena. And that was because, in essence, the Russian production dropped by around 2.5% of global demand. That 2.5% is what created that massive volatility. So you can see how tightly balanced that market overall is. I provide that context to then maybe give a perspective on the pace of renewables and the returns. I think it is folly to try to characterize renewables with one returns number or oil and gas with one returns number. We continue to invest and divest out of oil and gas assets. We continue to invest and divest out of renewables assets. Our focus is on making sure that we look at risk-adjusted returns. There will be certain projects within the renewable space that are significantly lower risk than, for example, the development of a hydrocarbon resource, and they might have a moderately lower return, and that is a part of a portfolio that we would like to have. Whereas in other cases, whether it's supply chain pressures or lack of the right fiscal environment, might not create an attractive opportunity in that place. So those returns vary. Our philosophy has been a real pivot towards energy transition investments, of which right now they constitute over a third of our overall investment in Shell, including a third of the 23 to 27 billion that we have announced for this year. But we will make sure that those investments go into the areas where we can see line of sight towards attractive returns to be able to reward our shareholders. Is the pace of renewables investment fast enough? I don't think we are moving as a world fast enough, but that requires significant change from government policies. It requires the right customer uptake, and of course, it requires companies like ours to continue to invest. Last year, we have made some significant investments in renewables, and we will continue to do so this year. So I do believe we are finding the right balance within our capital allocation, and that's one we will continue to manage as we go forward. Thank you for that questions, or for those two questions. Operator, can we go to the next question, please?
The next question is from Tom Wilson at the Financial Times. Please go ahead.
Morning, guys. In terms of that point you just made about capital allocation, I think the capex spend in renewables and energy solutions last year was 14% of total capex. I mean, is that the right balance for a company in transition, 14%? And do you have plans to increase that percentage going forward? So, for example, what do you think the split will be between renewable and energy solutions, or however you want to characterize low carbon next year, this year, versus the more traditional businesses? And then, staying on the same theme, I mean, given that you are a company in transition that needs to change, I was quite surprised that having made record profits, having doubled profits from last year, the capex guidance remains the same, 23 to 27 billion. Given the kind of imperative to overhaul the company, why not significantly increase that capex spend and try and accelerate the transition? Thanks.
Thank you, Tom. Sinead, did you want to pick up both if you want?
Very much so. Indeed. So, Tom, two questions interlinked there. So, first and foremost, you ask about whether or not our allocation to renewables is the right balance. So, if I take a step back, because I'll answer both in one go, we're spending 23 to 27 billion of capital in the year. And what we've said is that we will actually maintain that. So, between 2022 and 2023, it will still stay within the range. It's a broad range. In 2022, we were able to live within that very comfortably. We were able to do inorganic acquisitions within it, whether that was retail sites, or whether that was in the US, or whether that was Spring in India in terms of renewables, and whether it was related to things like Atapu, so one of our investments in Brazil. So a complete range of different inorganic opportunities came into that. We will continue to maintain that capital and that discipline into 2023. That will allow us to continue to align with our strategy and deliver what is there. What we see, of course, is that when we talk about low carbon or zero carbon investments, it's not just our capital, it's also our operating expenditure. Because as you can imagine, as you start investing into EV and things like that, a large part of that shows up in our OPEX. And therefore what we're seeing, of course, is that we look at it in its combination. If I were to look back at 2022, what did I see? I saw 1/3 of our spend into low and zero carbon. So that's 1/3 of our total OPEX and CAPEX together, and that's a substantial contribution. We expect to see it about the same in 2023 as well. That number of 23 to 27 will allow us to continue to advance our strategy, to advance the transition, and that means both the elements that we need today, so the oil and gas that's needed, including gas, which is clearly a part of that transition, but also to invest in other opportunities for the future. What I would say on that, of course, is that includes things like nature energy. So that inorganic acquisition that we did, which was related to biofuels, which will also fit within that 23 to 27 billion. Thank you, Tom.
Thanks, Sinead. Operator, can we have the next question, please?
The next question is from Tom Espinal at BBC. Please go ahead.
Just wanted to ask another question about windfall tax, if I could. So windfall tax in the UK, you've already gone over those figures. Is it a disincentive investment for you, especially in the North Sea? Just wondering about North Sea upstream plans, and also whether you had any North Sea renewables plans. And then secondly, there have been complaints that Shell's stated capex for renewables is actually misleading investors because Shell also lumps in gas in that, and if you look at wind and solar and what have you, it's Shell's capex on that kind of renewable is a fraction of what it is stated. So I was just wondering what your reaction was to that.
Maybe if you want to take the first one, I can address the second one.
Indeed. So with respect to the first one, thank you for that, Tom. Indeed. So in the UK, I think I ran through the fact that, yes, we were cash tax paying in this year, in 2022, and we expect to be more than 500 million in 23. What we look at when we're looking for investments is, as you say, it's a stable environment. We're investing for decades into the future. And of course, that means we need to look at economics over that time. Changes that occur to that make it much more difficult for us to have the confidence to make those investments, especially when the returns are either smaller or uncertain. So what we've seen, of course, in the North Sea is a 75% effective tax rate coming in. That is a substantial tax rate and is larger than most countries we see. That means that for every investment we're doing, we have to look at that, and we have to look at the fact that that tax rate will play out over the period. So we're doing it investment by investment, and we will make the decisions per investment.
Thanks for that, Sinead. Tom, to your second question, I would refute the claim that that what we have represented in the RES segment is misleading. We've been very clear all the way through that gas and power are symbiotic. You cannot separate the two because there is significant overlap in the way we run the businesses. But let me put that aside for a moment. And maybe also sort of expand your question into what Tom Wilson earlier asked, and that Sinead's already partly addressed. I think at the heart of the way we report, sustainability and investments in low zero carbon play across every single one of our business segments. So Nature Energy, that is a biogas player that Sinead earlier referred to, sits under our marketing reporting segment. And we've committed to a $2 billion acquisition there. Our EV charging business also sits under marketing. Carbon capture and storage, which is also part of the energy transition, will sit in multiple parts, sometimes in our chemicals and products and sometimes in our upstream. So our business fundamentally is going through a transition, and sustainability is at the core of energy provision as we look forward to it. And we have made very transparent the breakdown of how we account for that in our overall numbers. Thank you for the question, Tom. Operator, can I have the next question, please?
The next question is from Will Mathis at Bloomberg News. Please go ahead.
Hi, thanks for taking my question. One, do you expect there to be a shortage of diesel in Europe this year with a cut of supplies from Russia? And are you going to do maintenance at Pernis that could affect that? And I just wanted to actually follow up on Tom's question. I didn't think that Sinead said exactly if the portion of capex to the res business is good, or if you expect it to expand. Just following up on that. Thank you.
Do you want to clarify that first?
Indeed. Apologies, Will, if I wasn't explicit enough. We expect to see a very similar level of capex for the res business, specifically in 2023. I'll bring you back to the fact that that is not the only spend that we have in terms of low and zero carbon. It falls across many of the different areas. So just to answer the question in its entirety. Thank you, Sinead.
Will, to the first question, difficult to call. Yes, at the moment we see middle distillate supplies being tight. What is going to happen after the Feb 5th product sanctions come into play is it's unclear at this stage. If I play back what happened in crude markets, recognizing they're very different markets and the complexity of the logistics in the products market is an order of magnitude higher. But if I look back at what happened in December, there was a bit of an adjustment for a couple of weeks, but then flow started to stabilize again, and therefore, by and large, we haven't seen too much disruption. How this plays out in products, I think will be impacted by multiple elements, Russia's supply being one, and how the sanctions take effect, of course, plays into that. But also demand, how China emerges from the zero COVID policies. Those are all going to be in play. And so I think we'll wait and see how that goes. No particular major disruptions in Pernis production through the course of the year. Of course, we have routine maintenance that takes place on a regular basis, but nothing that's going to potentially change the balance of supply in that zone. Thank you for the question, Will. Operator, can we go to the next question, please?
The next question is from Jenny Strasberg at the Wall Street Journal. Please go ahead.
Hi, good morning. Thank you. Just curious, I know the rules are still being written for the Inflation Reduction Act in the U.S., obviously, but can you give us a sense where you see opportunities, even in early days, what seems potentially most attractive for Shell in terms of potential returns or stronger economics and projects there? And then secondly, I know there have been a lot of questions about CapEx, but I'm just curious, Nature Energy, $2 billion inorganic deal. Do you see more of that happening? Do you see attractive targets out there? And can you give us a sense of where? Thanks so much.
Thank you, Jenny. I'll pass the second one on to Sinead in a moment and maybe just take the first one. I think the Inflation Reduction Act has really been a good stimulus to climate and energy policies in the US, something we're excited about and support. There's multiple opportunities. We, of course, acquired a renewables platform predominantly focused on solar in the US last year called Savion. We see now opportunities that we were on the fence on that are suddenly interesting because of the tax credits, and therefore will now attract capital dollars to invest. And therefore, it has stimulated further opportunities in our renewable generation drive. We also see interest in areas like blue hydrogen, where the Inflation Reduction Act has created a good stimulus. Carbon capture and sequestration is another one, including things like direct air capture. And so I think there's a broad set of opportunities. Our focus is on making sure we leverage our existing assets in the US to be able to leverage some of the opportunities that have come up. And of course, we will continue to look at opportunities that might emerge that might add to our portfolio there. But it's definitely an interesting stimulus. Sinead?
Absolutely. Thanks, Jenny. Indeed, Nature Energy is a wonderful example, a really strong company which has grown quite dramatically and now wishing to take the next step. Very well set up. And of course, partnership with a company like ours allows us to be able to connect customers and their needs, particularly around compliance, but more than that, their needs, and of course what the company brings. So we look forward to seeing many more of these opportunities going forward. Spring Energy was another perfect example where in India, a great platform, it needed more capital to grow and it needed a link to customers, and we have that. So we're expecting to see quite a few more opportunities coming up in the next year. We'll see how those play out, but fundamentally it'll be about where do we bring differentiated capability and where can we realise differentiated returns as well. Thank you.
Thanks, Sinead. Thanks, Jenny. Operator, can we have the next question, please?
The next question is from Stanley Reed at the New York Times. Please go ahead.
Do you think Europe has gotten through the worst of the kind of gas crunch this year and into next year, or do you think there's still risks out there? The other question is, why do you think that valuations for your company and other large European energy companies are substantially lower than those of similar companies in the U.S.? I mean, one theory analysts have is that investors aren't particularly convinced by the European companies' investments in renewables, that those will pay off.
Great, thank you for that, Stanley. I'll touch on both, Sinead. So what I'll start off with is Europe. I think, let me maybe step back and talk about what has gone well in 2022, and then maybe some of the risks. What has gone well is, I think, Europe has mobilized with regas capacity. Germany, for example, brought 4 floating structures, floating regas terminals on stream within 8 months, a record time. At the same time, the EU Fit for 55, I think, is creating some of the right incentives to be able to continue to invest further, in particular in renewables, to build energy independence as well. So there's been some positive moves there. But if you look at 2022, multiple factors have played in. Renewables has helped, but we've also had quite a bit of luck. 2 specific areas that I think one cannot depend on going into 2023. One was mild weather in Europe that essentially meant we didn't need as much of the gas as otherwise would have been required. And secondly, China was not importing to the level that it typically imports, and around 50% of the LNG cargoes that came into Europe were redirected from China. In a world where now China is coming out of the zero COVID and we already see strong economic activity starting to return, China will likely take up a significant portion of the LNG that typically would be going to China. So on balance, what I therefore see is a tight market still going into 2023. I'm pleased to see where the gas storage levels continue to be at the moment, but I would not say we're out of the woods, and therefore caution needs to be exercised, and we need to continue to focus on a multi-year energy solution. On the valuations, I think it's fair to say that I believe at least we're undervalued, and that's partly why we continue with robust buybacks. Last year, a big portion of our overall distributions of 26 billion, which is, as Sinead said, north of 35% of our total cash flow from operations, came from buybacks. Our focus, however, is to make sure that we continue to be able to perform and to do so with discipline, because that's the best way we can, or those are the biggest opportunities we have to be able to continue to raise the valuation of the company. We have some outstanding businesses, such as our upstream business that is performing in an excellent way at the moment. We have a world-leading integrated gas business. We have an unparalleled marketing business that touches customers all around the world, many of those who want to decarbonize over the coming years. So I think we are uniquely positioned to win, not just in the short term, but in the short, medium, and long term as we build a company that is resilient for the future of the energy transition. And I look forward to seeing the valuations come as a result of that strong performance that I expect of my organization and that we hope to deliver consistently and predictably for our shareholders. Thank you for that, Stanley. Operator, can we have the next question, please?
The next question is from Eva Schuten at New NL. Please go ahead.
Hi, good morning. Thank you for letting me ask a question. I want to ask something on a more personal level to Wael, if I may. How does it feel to announce this sky-high profit while people still struggle to pay the energy bills?
Eva, thank you for that question. Firstly, to acknowledge these are incredibly difficult times. We are seeing inflation rampant around the world, and we are seeing the impacts of that. Also, of course, energy prices impact many. I can tell you when I go back home to Lebanon, some of the challenges I see people going through, sometimes without electricity for a full day, are the challenges that we see in many, many parts of the world. Just in 2022, 75 million people lost access to electricity. The answer to that is to continue to make sure that we provide energy to the world, increasingly low-carbon energy, and that's what we're trying to do. We have been able to deliver 194 LNG cargoes to Europe this year to be able to make sure that the lights are on, which otherwise would have gone off. I am proud of how this organization continues to deliver energy to the many. And I hope that by continuing to invest in energy, we can bring down those prices so that people can be able to afford energy and that they can take it for granted as they should, because energy should be available to everyone. Thank you for your question. Operator, can we take the next question, please?
Thank you.
The next question is from Ashley Armstrong at The Sun. Please go ahead.
Yes, hi, morning. You mentioned about the stability of the country kind of playing a big role in the investment decisions, 25 billion. Would you say that the climate is more stable than it was kind of in the autumn? And is that feeding into your thoughts? The second point is, for readers, and I'd say the general public, when you're looking at the massive awards that you're handing your investors, looking at the share buyback that you've just announced being bigger than the levies that you are going to be paying in the EU and the UK, is there not more that you could be doing for households and motorists to relieve the burden of the high costs that they are facing? Thank you.
Thank you for the question, Ashley. I'll invite maybe Sinead to take the second one. I'll take the first one. You want to start?
Yeah, certainly. No, thank you very much, Ashley. So in terms of the amounts, you're basically saying, should we be doing more? What I'm looking at is in terms of how do we return our money and what do we do with that money? 13 billion of global taxes make sure that we play our part across the world to ensure that governments have monies to be able to reallocate where they feel fit to do so. We make sure we're providing the energy that is needed. Wael has just referred to the fact that actually we brought in 194 cargoes into Europe this year. Just to be clear, that's more than 11% of the imported cargoes across Europe. So we're playing our part in making sure energy gets to where it needs to be. Beyond that, we're of course very much into the consumer and ensuring that we are there for them when needed. You'll have seen for Shell Energy Retail in the UK in particular, we've offered hardship funds. We're making sure we're in contact with our customers. We have more than 50 million of a hardship fund available for those who need it to be able to reach out. It is a balance, and that's what we're making sure we deliver in each of the countries where we are present.
And let me maybe touch on the first question there on stability, Ashley. We don't look at stability over periods of weeks or months. In all honesty, we look at it over decades. It's more, is there an investment climate that if we were to invest over the next 5 years, because typically that's the period we invest over, and only only have our shareholders enjoy the returns from those investments in years 6 to 20. It's the stability over the long term that's key. We see that stability in multiple countries. It's important to be able to retain that stability through thick and through thin. What we have not seen is government stepping in when oil prices are very low or gas prices are very low. And similarly, I think there has to be a balance when oil prices are high, that we don't see windfall taxes and price caps and the like. This is a market that needs to be allowed to move so that we can make informed investments. That stability, therefore, is something we will keep an eye on, and we continue to provide our perspectives on. But of course, ultimately, taxes and the like are matters for government to decide on, and we leave it to them to do that. Thank you for the question. If I can have the next question, please, operator.
The next question is from Alex Lawson at The Guardian. Please go ahead.
Morning. Two quick ones. Tell me how much exactly you paid in terms of the UK energy profits levy last year and how much you expect to. So not just your broad UK tax, but specifically related to the EPL. And do you have any concerns over the prospect of a Labour government? Labour don't seem very impressed with with Shell's conduct so far during the energy crisis. Does that feed into your view of what instability counts as in the UK?
Thank you for that. Alex, you want to take the first one?
Yep, first one, very clear. The numbers I gave you were the energy profit levy. So to be specific, we've paid some $100 million dollars worth related to 2022 in the UK, and we expect to pay greater than $500 million for 2023 related to the UK energy profit levy, to be specific.
Thanks, Sinead. And Alex, to your second question, once again, I mean, we don't go through political cycles. We look at the long-term stability and how governments choose to conduct themselves in the way that they create the right economic incentives. Ultimately, I'm a firm believer that government will recognize that companies like Shell are a big part of the solution. We're trying to support and trying to deliver energy today. As I mentioned earlier, 20% of the gas processed that is used in UK households as well as in industry is coming from Shell facilities. The 18% of LNG imported was imports we redirected from other parts of our portfolio to bring here to the UK. So those are incredibly important contributions to make, but also the investments we're making. For example, in offshore wind in Scotland, one of the opportunities that we have for the future. Opportunities like the investment in Jackdaw to bring domestic production to the UK. Those are the examples where I hope, irrespective of which government is in power at any point in time, this will be recognized as being a core part of the contribution that we can make to the UK. Thank you for that question. Operator, if I can have the next question, please.
The next question is from Bert van Dijk at the Dutch Financial Daily. Please go ahead.
Yes, good morning. Two questions, if I may. First one, there seems to be, since the start, to be continued operational issues at Prelude in Australia. And Shell has written off already billions at that project. And I was just wondering if you are still confident in the project or if you're considering changes in its operation. And the second question is, you mentioned that related to the capex, that the world is not moving fast enough. But I'm just wondering, if you look at all the hundreds of billions of profits that the sector is making, and the fact that that is not being invested on a large scale in renewables, is that a sign that there are just not enough attractive large-scale renewable projects to invest in? Thank you.
Bert, thank you for those two questions. You want to start with the second one and then I can go to the first one?
Indeed. With respect to the capex levels, I think it's a great question, Bert. Just overall, our 23 to 27 billion of capex is actually one of the largest in the industry. Just to clarify that. What you're asking, though, is we're just not seeing the industry move fast enough into renewables. We are seeing considerable investment in different countries into renewables. But what we are seeing, of course, is the time lag that comes between the investment and then actually seeing the delivery that comes with it. We are, of course, looking for customers to be able to step up, to be able to be there, and to be able to match the investments with it. And that's going to take some time as it develops. Items such as the IRA or the Inflation Reduction Act in the US are great moves that will see acceleration come through, and we expect to see the same in the EU as they work towards putting their equivalent in place as well.
Thank you for that, Sinead. And Bert, your first question around Prelude. To acknowledge, we've had some challenges in the operation of Prelude in 2022. I continue to be highly confident in the capabilities of our team to be able to overcome these. I would say this is an incredibly complex facility. There's a lot of first-of-a-kind equipment that we had to put into that facility to be able to deal with the very complex conditions that it operates in. Also important to recognize, because it is a distance away from shore, rectification of issues just takes time. We need to be able to mobilize people. We need to be able to create the space for them. We need to be able to move the equipment over that is required for maintenance. So it does take more time to work through. The facility was restarted again in the earlier part of January. Continues to run very smoothly at the moment. And what I have learned in my 25 years in Shell and looking at major facilities, it takes time to be able to really get a full understanding of the operating envelope within which we need to operate. And the team is continuing to work on that, and I can already see the confidence continuing to grow. So I hope that we can continue to see the improvement. But let me be very clear. Challenges continue in running a difficult asset, and hopefully we will be able to reduce the downtime that we have seen in 2022. Thank you for the question, Bert. And operator, if I may have the next question, please.
The next question is from Hannah Ziadi at CNN. Please go ahead.
Hi there. Thanks very much for taking my question. If possible, could you spell out exactly how much in dollar terms was invested in renewables in 2022 versus how much was returned to shareholders? And then just sort of sticking with that theme, well, you sort of kind of made some comments earlier about the fact that, Shell continues to invest and divest, in and out of oil and gas, and it continues to invest and divest in and out of renewables, which sort of, implies or maybe suggests that these are on a par. I don't know, is that fair? Is that a fair kind of reading of that there isn't a push, sort of a bigger push into renewables over oil and gas, that these are all kind of competing for CapEx spend on an equal basis. If you could just comment a bit more on that.
Sure. I will pick up, maybe I'll start with that second question, and then Sinead, if you want to talk about the breakdown. I think our strategy, Hannah, is clear. It's one where we see ourselves providing secure, affordable, and more low carbon energy to our customers on our pathway towards net zero emissions by 2050. We're very clear on the destination, and we recognize that we recognize we need to be able to continue to reduce our own emissions, what we call our scope 1 and 2 emissions, and we've put a target there of a 50% reduction by 2030. I'm pleased to say that in 2022, we had already achieved over half of that target. So we are well on our way towards where we want to be, which is a lot more than I can say about many other parts of the overall industrial complex around the world. I think we also want to be there to be able to help our customers decarbonize, which is what we consider our scope 3. And there we have very clear targets. Our scope 3 targets are a 20% reduction in the carbon intensity of the energy we sell. As we look at investment opportunities, we keep those targets in mind. We continue to drive for value as we achieve those targets. And so when I talk about investing and divesting, it is because ultimately we are a business that needs to be able to earn the right to grow and to be able to earn the right to have incremental capital to spend on these projects. As you go into the businesses we're going into, some of them work out really well, and some of them you want to be able to check, or maybe you have a point in the market where you can monetize those assets. And we will continue to do that, but our trajectory, have no doubt, is one that is moving towards lower and lower carbon, both our own as well as our customers. Let me hand over to you, Sinead.
Happy to. No, thank you very much, Hannah. So I'll just, to clarify, so with respect to capital expenditure in our renewables business, we spent more than 4 billion, of course, of CapEx in our renewables business. What Wael and myself have both explained, though, of course, is that there is much more that is related to low or zero carbon investments and also just expenditure across the organisation. We've already referred to EV charging, which sits in marketing. We can talk about biofuels, which also sits in marketing. We can talk about some of the carbon capture that sits in chemicals and products. Therefore, in very simplistic terms, approximately 1/3 of our total spend, CapEx and OpEx together, is in zero or low carbon investments. So I hope that gives you a perspective.
Thanks, Hannah, for the question. Thanks, Sinead. Operator, can we have the next question, please?
The next question is from Helen Thomas at the Financial Times. Please go ahead.
Hello, thanks, Liz. Just following up on that, Sinead. Your point that there is more low and zero carbon spending beyond the renewables segment. Are you able to give us a sort of more representative figure for low and zero carbon investment last year, please? The other thing I wanted to ask about is just, you talked about the importance of gas in the transition and the sort of indivisibility of gas and power and how those two work together. Can you just explain the restructuring you recently announced and sort of how moving the gas business in with upstream sort of fits into Shell's sort of solutions type, customer focused approach to the energy transition? And just one more question, if I may. You mentioned earlier that, the world is undershooting the sort of the transition path it needs to be on. One of the things you mentioned was that needed to change to make that happen was government policies. What would you most like to see happen in terms of UK policy to, induce the industry to spend more?
Super. Helen, that's 3 questions. I'll take the second and the third, and I'll invite, maybe if you want to start, Sinead, with the first.
Certainly, I'll have a go at this one again. Indeed. So we spend 25 billion in 2022 of capital expenditure and 39 billion of operating expenditure, 64 billion of cash that goes out in terms of our ways of working, our investments, to make all of our assets work and to deliver the energy that the world needs. What we say on that is that approximately 1/3 of that goes towards the low carbon and zero carbon. So 1/3 of 64 billion more or less goes to that. The reason I'm not more specific, just to be clear, Helen, I'm not avoiding the question at all. It's simply put that it fits into the different aspects of it. So I don't pull it out and add it together in that way, but it gives you a feel. 64 billion and approximately 1/3 of it.
Thank you for that, Sinead. Let me start with government policy and then go to the recently announced internal restructuring. So I think on government policy, I would say two things are always important for us, but I'm in no position to counsel or advise. That's a decision for the government to make. One of the things we always look for, I've said earlier, is stability, and therefore the less ad hoc interventions, clearly the better, and that gives us the confidence to be able to say, we know what to expect after putting our shareholder dollars into an investment. The second one, I think, is the speed of permitting. That's always a challenge, in particular in many of the renewable spaces where you have significant permitting required for a distributed set of assets that you need to put around. And the faster we can move on the permits in a responsible way, of course, taking into account all the right environmental reviews that need to happen and all the thorough challenges, all of that is required. But being able to expedite that in service of trying to move faster on the energy transition, I think would be a welcome add. On the changes, my fundamental belief is this is a company in very good health. And we have absolutely the right strategy. And the core of my focus over the coming decade is to make sure that I can actually support the company as we operationalize the strategy. And my belief is that core parts of operationalizing the strategy are performance, continuing to really focus on performance excellence, and discipline in the way we allocate capital, in the way we respond to the volatility in the market that we are in. And so in pursuit of performance and discipline, I announced some of those changes. And what do the changes try to do? We bring upstream and integrated gas together because there is a significant amount of commonality and overlap between those two businesses. A lot of the gas supply that comes out of upstream goes into some of our LNG facilities, for example, in a place like Nigeria or in Brunei. At the same time, those two businesses have some similar challenges in trying to address and reduce their own emissions. And so there is a lot of commonality there that they can build off each other and remove the interfaces that might slow us down. The other side of it is combining our downstream and our renewables businesses. Those are our customer-facing businesses, and we have developed arguably the largest customer interface in the energy sector through our more traditional businesses. And now that we have incubated our renewables business over the last few years, it is strong enough now to be able to be directly with the downstream business so that we can offer our customers the range of energy sources that they need, increasingly at lower carbon. That allows us to be really focused in terms of removing the interfaces that exist today, continuing to drive excellence and performance, and at the same time, we announced a change where our strategy will be combined into the CFO's portfolio as well as our M&A capability. So we are clear on the discipline in one part of the organization and are able, between myself and Sinead, to have clarity of where we're going to allocate the capital for the organization. So that's the background to that change as well, Helen. I hope that helps. Operator, if we can have the next question, please.
The final question is from Hamish Penman at Energy Voice. Please go ahead.
Thanks very much, and good morning, both. I was just wondering if there are any updates on the startup at the Piercefield. I believe it was meant to be around this time, and also if there was an estimate on Penguin startup as well in the North Sea. And just as an aside, Ithaca says it's targeting Cambo FID this year, potentially Q2. Will Shell be out and a new player be installed by that point? Thank you.
Thank you. Yep. You want to take those?
Indeed. So in terms of the Pierce refit, yes. I'm pleased to say that it is operational and we are watching closely as that ramps up. In terms of Penguins, so the facility is on its way to Norway at the moment. It's passing the Canary Islands, so on its way. As soon as it gets to port, we will look at, of course, the final things that need to be done before it moves towards its final destination. And in terms of Cambo, just a simple one on that. As we said before, Cambo does not make sense for us in terms of an FID, in terms of economic side of things. Our position on that has not changed.
Thank you for that, Sinead. And Hamish, thank you for the final question. Let me close off now and thank you all for your questions and for joining this call. We wish everyone a pleasant end of the week. Thank you for joining us today.